Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves these markets. And this week we are going to jump right into the metals because leading off this week, we have the G7 meetings. Today is day one on Wednesday, and we're already starting to see some market movements in gold up about $20 today.
Yeah, Miles, good to see the action in gold today, but more importantly, let's talk about what silver's done over the last couple of days. It looks like we're up about 5%. Let's jump into the white metals to start off with.
Yeah, Eric, I don't think that's a bad idea because silver's up over 7% since Independence Day. You know, it's making a pretty good move, obviously almost parabolic at this point the last day or two. So after we stepped up, put in this higher low back in May, I've been saying for the last couple of weeks, we've got to push above that A-wave high. We've got to get above the January, February highs up in the low 16s, and we're almost there now at this point. That's probably going to push us into the 1750s. That'll be the culmination of the C-wave, Elliott wave theory, and then probably a correction back down to this high we need to get above now. So if I had to speculate over the next few months in silver, another $1.50 up from where we're at now, followed by a retracement back to about where we're at now, and then setting up for the next step up to eventually test that longer-term high around $20, which is the number I'm looking for to argue that we are now in a massive multi-year breakout. Now, comparing that to gold, obviously, we're talking about getting back to $20 on silver, which is that 2012, 2013 pricing. Gold's already done that. So gold has, last week I mentioned two, to me, the most important numbers, around 1485 on the high end and 1345 on the low end. And we just can't seem to push back down. We've been hard stuck at this multi-year 50% line, and we keep inching back above it. We're back above it today at 1425. I do think some of that has to do with the expectation of lowered interest rates and this G7 meeting that's taking place over the next week. So we could go ahead and see moving into fall, us get up and test that 1485 high, and then possibly some type of pretty good correction back down to about where we're at now. So we may not ever get back down to that 1345 number, which was the old high for a number of years. So in the short term, just over the last couple weeks in gold, we had that 1440 high. We're back at 1425 now and inching up. If we get back above the just after Independence Day high in the short term, I think we're going back up and testing 1440, and if all of Reddit does march on Area 51, I think that could frighten a number of people and get that price back up to those short-term mid-1400 numbers.
Yeah, Miles, and one of the things we've been talking about for months on this show as we've watched this gold-silver ratio just climb and climb and climb is that when things really do turn around, silver will outpace gold. And finally, the last couple of days, we've gotten an example of that. Today, we've got gold up, about 1.5%, $20, but silver's up 2.5%. Same thing kind of happened yesterday. So that ratio, over the last week went from 92.5, which was, close to a 25-year high. And now earlier today when I checked, we were at about 88.5. So it can happen very quick when that ratio shrinks. So, when we're calling for these historic numbers like a 92-to-1 ratio, it means, that's significant. That's time to get in and get the silver because, as you see, in a week, we've already moved 4 points on that ratio.
And speaking of ratios, I think that's a great place to kick off the platinum discussion. I put this chart together for a client of mine earlier this week, so I thought I'd share it here on the show. What we were looking at is taking a portion of his gold position he had picked up a number of years ago and swapping into some platinum. Not all of it, but about 15-20% market reallocation. So what I did is I put together okay, what do we have to do to increase our ounces 50, 100, 150, 200%. And if you look at the platinum to gold ratio chart over the last 30 years, you don't have to get very far up. In fact, you're just moving up down to the bottom end of that ratio up and down to double your ounce position. And obviously, if we swing all the way up to the top end, you're tripling to quadrupling your ounce position by shifting part of your metals position from gold, which we do think will do well, but into something like platinum, which when it does end up playing catch up, could pretty drastically outshine. That certainly happened between platinum and palladium when we put a number of our clients in palladium back about 5-6 years ago. We saw in some cases a 300% and 400% return. Now, you can't expect that, and you certainly wouldn't put 100% of your assets into something like that, although maybe hindsight's 20/20 and we all wish we had. But to see something like that take place again, even between two pretty stable metals like platinum and gold, to take a 15-20% metals allocation that direction makes a lot of sense. So if there's anyone out there sitting on a pretty substantial gold position for your metals, if you haven't looked at silver, if you haven't looked at platinum aggressively, definitely give one of us a call here at McIlvaney ICA, and we can take a look at your existing portfolio and see if there is anywhere based on the dates you pick stuff up that it makes sense to do some reallocating.
Palladium, Miles, I actually overheard you in the office this morning telling someone, I hope Palladium hits 2,000 because that means platinum's going to hit 4,000 when it plays catch up. Why don't you go into that a little bit more and then tell us what Palladium's got going on this week?
Sure. Palladium did put in that higher high early in July. We hit that peak just under 1,600 back in March of this year at a pretty substantial drop into May, and then back up again to retest it and actually exceed it. Although we have pushed back down, Palladium's off about $75 from the high, and probably going to step back down here. I mean, the 50% line's way down at $14.50. So even if Palladium continues in a bull market like it has, the pricing has gotten so astronomical and even parabolic at this point that multiple $100 moves up and down don't change the long-term direction. So I still think the trend is bullish in Palladium, which makes me even more excited to not own it, to start owning some of the other metals.
So Miles, for the listener that's, listening right now that has Palladium in their portfolio still, and, they can say, well, Miles, it's still going up. It's been going up. What advice would you have for them, and what recommendation would you have for them?
Well, again, for us, it's all about how many ounces you own, especially how many ounces do you own at a cost-effective price. And the best way to figure that cost-effective price is the ratios and relationships between the different metals. So sure, Palladium can continue up, but your upside in Palladium, at this point, if you look at, say, Palladium versus platinum, in order for platinum to double in price, you're still 25-30% the old-time highs, back from the old-time highs. Mm-hmm. On the other hand, in order for Palladium to double in price, so if you want to get the same return out of Palladium as you can get out of platinum, platinum only has to go to not even close to its previous high point, whereas Palladium needs to go twice where it is now. So from my perspective, I'd rather get out of something 10%, 20% before the top if it gives me the potential to get into something that could be as much as 200 or 300 or 400% below its next top.
And speaking of asset classes at the top, let's move right into the Dow. We've got earnings week kicking off this week. You've already felt some pressure from the banks with the lower interest rates and how they're going to make up that profit. I know we just saw right before we came in here, Netflix released their second quarter earnings and their shares fell about as much as 12%. I saw, we're still at all-time highs or very near in the markets. Is this the top, Miles? You seeing a top or?
Well, you go back to the start of 2018, we put in a high. Then we had a pretty big crash. Then we put in another high end of 2018. And then everything fell apart at the beginning of 2019, down almost 20%. They did a really good job of capping it at like 19.5% down, because the second you hit 20% or more, Fox News comes out and says, bear market.
That's right.
So we definitely have pushed higher. But this is the third time just this week that we hit pretty clear increasing trend line on the highs. So we've got higher highs coming in, but if you look at the lows in 2018 and end of 2018, early 2019, we've also got lower lows. So higher highs and lower lows. Now, to me, generally when you're still putting in these higher highs, but the market reaction down is that severe, that just feels bearish to me. So we'll see how this plays out. I mean, if we're going to continue that pattern, you're talking about pushing down about 35% on the next move. And then the likelihood you ever get back up to those prices again is slim to none, at least in this market move. And that actually would line us up, a 35% drop down staying in line with that declining trend line on the bottom of the Dow chart, that's going to line us up right at the end of like 2020 or 2021. Wow, following right on the heels of the election, big surprise, and put us down around 18,000, which were the high points of 2015. So I hate to say politics, economics, and finance can all line up from time to time, but it's very likely we could see something like that happen, which is exactly what happened back in 08. You know, a lot of people forget leading into the 08 election, that was the Lehman Brothers AIG stuff. I mean, they postponed or at least halted the election for a time, and they brought Barack Obama and they brought John McCain, and a whole bunch of people sat in the White House and debated what the heck are we going to do about this. So what if we see something like that play out next year during the election cycle?
Yeah, Miles, and we might see, you know, even a bigger push up in the Dow and in the equities in general, with the general consensus that Powell is going to cut rates at this point. It's kind of a given. Now people are just wondering how many basis points is he going to cut. The dollar right now is hovering still above 97. You know, depending on what he does, of course, that's going to have an effect on it. But what are you seeing technically from the dollar?
Sure. I mean, the dollar's still in the rising channel. You know, lower interest rates should be negative for the dollar long term. I mean, that does devalue the currency. It just makes it more available, we'll say.
Which Trump is adamant about right now.
Yeah, of course.
Full-fledged war against our own currency.
Yeah, the guy's not ashamed to file bankruptcy, both personally and nationally. But it's not just about what the dollar's doing. It's also about what the euro's doing. While the dollar's been inching up, the euro's obviously been inching down. And the euro, I'm much more scared of the euro going ZERP or even negative than I am the dollar in the very short term going zero or negative. If we have some type of massive crash in the equities market, I think they're not ashamed to go that direction. But in the short run, you know, with Lagarde that we talked about last week, if Lagarde takes the position, and with the G7 meeting this week, and with what's taking place with Deutsche Bank, I'd be much more inclined to see the euro start pushing its rates down prior to the dollar, which actually gives us some wiggle room, which allows us to come down a quarter point, half a point without severely devaluing the currency. So there's a lot of games taking place, especially between the U.S. and Europe, in what the currencies are valued at. So to cap this week's show off, with the Federal Reserve announcement and potential interest rate drop pending right around the corner, we're going to turn to our producer who has pulled out the magic 8-ball and is going to tell us what the magic 8-ball says. So, Mr. Producer, what direction are the interest rates going next week?
Ask again later.
Ask again later.
So we'll check back with our producer in a couple weeks, and hopefully his 8-ball's in order then. That's going to do it for Golden Rule Radio this week. Thanks for listening. If you like what you heard, give us a shout at 1-800-525-9556. You can find us on Facebook at McIlvaney Financial, Twitter at ICA Gold, or head on over to our website at McIlvaney.com.
Thanks for listening. Have a good week.